Hello investors, today I'll speak about 3 dividend stock. This year it's going to be very tough, so now I would like to receive a stable cash flow, a stable dividend payment towards the end of this year. So today I'll speak about 3 stable companies that can give you and will pay you a very stable income. So let's start with the first company. It's Verizon Communications. It's a communication sector company. So if we look at the chart, so I think we traded at a range, the range between 38 to 61 bucks. Now we traded at a lower border of this range, so now I'm expecting of course this stock to show a growth. By the way, the dividend yield of the stock is very impressive, it's more than 6%. And also let's have a look on the momentum indicator, the RSI. Now on the monthly time frame it's 33, so telling us that the stock of Verizon already oversold. So of course from this level we may see a nice bounce. Let's have a look on the dividend history of this company. We see that the dividend increase track record is 18 years, so it's quite impressive. The 3-year dividend growth rate is more than 2%, and also the payout ratios only 51%, telling us that only half of its net income the company pays as a dividends. So here is a room for Verizon even to increase the dividend payments. And of course dividend yield very close to 7%. It's much higher than the dividend yield of US Treasury bond. I remind you that now it's about 4%, so 7% of annual dividend yield. For me it's very good income and good dividend payments. Let's have a look on the fundamental parameters of Verizon. The market cap is 160 bucks. We see that the PE ratio is about 7.5. The average for S&P 500 index companies is now 15, so it's a very cheap valuation. And if we'll check the revenue, it's on a quarterly basis it continued to grow. And of course last quarters we see that the net profit margin also increases. It's very good sign. We see it was 13, 15, 14, and the last data is about 18% net profit margin, so it's very impressive and strong business, very stable business. So of course Verizon, it's one of the stocks that I hold in my portfolio. Of course now it's traded I think with a nice discount. And let's check the P ratio historically. Now it's around 7. It was 16, 15, 12, but now we can buy a P ratio, price per earning, only with to buy it of valuation of 7, and of course to receive a dividend yield about 6.8%. So for me it's enough, and that's why that's the reasons why I'm now continue to buy Verizon stocks. Let's go forward to the next stock is AT&T. Actually it's the same sector as Verizon, telecommunication US sector. So here using the Elliott waves, I think it was the first or the second, the third, and the first. Here most probably the fourth wave is finished. By the way, 15 here is a major support level, and now I'm expecting to see another move up in the fifth wave. In this case I would like to see AT&T stock higher than 40 bucks, so the growth potential here is huge. And of course don't forget that the dividend yield now is about 6%, so for me 6% dividend payments also it's a nice and a good figure. If we will check the quarterly data, look, so the revenue of this company continued to grow, but we see that last quarter it show a loss, most probably just technical situation, because let me check the cash flow from operation activities on the quarterly basis. So it was, look, yeah, we see here a decreasement but on alien basis, yeah, only 32. But here, if we will check the investing activities, cash flow from investment, yeah, here it was last year it was 25 billion bucks. So maybe here is the reason why it was such decreasement in the operational cash flow. Anyway, I'm expecting the next quarter to see much stronger than the previous one, and I hope that AT&T will show us a nice performance. And don't forget the PS ratio, price per sales. It's 1, so it's in my mind, of course, PS ratio of 1 is very cheap. So technically we see that the stock already oversold. There's a momentum indicator of 46, and here we traded and around the major support level. It's the levels of 2002, by the way. So of course, nice dividends, 6%, and the company is huge. It's more than 100 billion bucks. So AT&T, it's a very big company in the stock market, and I think that the dividend payment here is quite safe. Let's move to the next stock for today is 3M companies. So here, let me see. Let me look at the chart. So here, I think here it was an impulse. The first wave, the second, the third, the fourth, and the fifth. Here it finished, and now I am expecting to see ABC move, a correctional wave. So most probably the wave A finished, then expecting to see another bounce, another spike here from this level, the wave B, but then another decreasing at the wave C. So anyway, now the targets for wave B, some kind of impulse wave, it can be about 160. So in this case the potential to grow is about 30-40%. Don't forget that the dividend yield is more than 5%, so it's quite impressive, very high dividend yield. Let's have a look on the historical of the 3M dividend payments. We see that the years of increment 66. It means that this company is already a dividend king, and the three-year dividend growth is more than 1%. So for me, when I see such a nice dividend yield, technically a good point, it can be now very interesting level, because their side the momentum indicator is 38, so it's already, the stock already sold. And by the way, now from its high level it down more than 50%. So why not? It's better to buy at 100 bucks than 250, 230. So dividend yield we got. Let me check it fundamental parameters for a while. We see that very stable cash flow. So we see that the revenue showing a slight increasement, and the net profit margin is 17%. So for me it's quite enough. And by the way, the PE ratio is only 10. PE price per earnings. So we see historically it's near the lowest parameter for last 7 years. So it's better to buy a PE ratio at 10 but then 20, 30, 15. So why not to buy such a dividend king in your portfolio? So now I told you at the beginning of this video, I'm not expecting the S&P, the Nasdaq to see a very strong performance in this year. That's why I prefer to buy dividend stocks. I would like to receive a dividend cash flow in this year. I would like to see a money call, a dividend calls. So those three companies I continue to hold in my dividend portfolio. So if you like this video, of course, press the like button, don't forget to subscribe to my channel, and see you on the next time. Bye.